On the other side, you had Silicon Valley venture capitalists and tech investors who were saying, whoa, look at this growth rate. Look at how big this company could be. Look at the fact that they started in books, which is a great category for a lot of reasons, but they're going to go into music and they're going to go into toys and they're going to all these other things. And they're a super smart management team. Companies run exceptionally well. They'll probably spot a lot of other things to go into over time. So we think this company can get huge. That was a big fight in the markets for at least a year. And then when I started to pick up coverage, the stock had already done very well. People were astonished. It was getting trashed all day long on chat boards, and people were saying how stupid it was. I came out when I picked up coverage and said, no, you know what? The optimists are right. Like, this is a company that's worth making a bet on. There's a lot more upside that's not in the stock. Go. But I was a new analyst. I said it pretty quietly. Oppenheimer had a conservative sales force. They're like, oh yeah, Amazon. Okay, we're just going to watch this thing for a little while. In relatively short order, the stock went from something like 90, where I rolled out on it, to 200. I had been nudging my price target up as it went up. And I finally had one of the folks on the sales force say, Henry, you keep coming out here and telling us how great Amazon is, and you put a price target on it that's what's 15% above the current price. Like, why would we buy it if that's the only upside we can get? Why don't you go off and do your numbers and come back and tell us what you really think it can do? And I actually had done that in my first report. I'd said basically, hey, you're right. There's a wide range of possibilities for this company. It could be worth anything from $2 a share to $400 a share. I'm going to start with, I don't know, whatever, my 120 price target. So I went back, I redid the numbers. The company had actually done even better than I thought it could over the time. I remember being in the back of a plane. I'm flying back from Houston, and it had already exceeded my prior price target. And I finally said, you know what? I'm just going to do what that salesperson asked for. I'm going to tell him what I think it can do. And so I ran the numbers again. I said, I think it got 400. So I went out the next morning, and I will point out that I think one of the reasons that got so much coverage was the fact that it was $400. Most companies in those days were splitting their stocks very frequently. So shares were usually between $10 and $50, and then the company would split its stock. Now they don't. Now stock can go up to big numbers, but in those days, $400 was like a big number. What I did actually was no different than putting a $40 price target on a $22 stock. But because of that extra zero, and because it was so controversial to begin with, it was like throwing a drum of gasoline on a bonfire. And everything went crazy. Fortunately, it did hit 400, and then I think went to 580 in that stock split. So I was lucky there, but I didn't expect it to happen in 2 or 3 weeks. I thought it would take at least a year.
Yeah, I think that compressed time period is also what made it so famous at the time, is that, oh, this is really, the phrase at the time was internet time. Things are happening on internet time. Paint the mood. I've not really talked to a lot of folks from the Wall Street angle about how Wall Street thought of these newfangled tech companies in the late 90s. Like, what do they think of this explosion of startups? It's a different culture. We're used to 30 years on the culture of startups, and how technology is 30% of the market and the economy and stuff like that. But what was Wall Street's perspective on these tiny companies just coming out of the woodwork like cockroaches?
Well, I think, again, a wide range. Investors who had invested in tech startups and small IPOs for a long time, very used to it, very used to making these projections with relatively little to go on and making assumptions about market size and management teams, so forth. Most investors thought it was ridiculous. Thought it was the latest bubble. We've had these crazes before. We had them with color TVs in the 1960s. Had it with radio and planes and cars in the 1920s, canals, everything. Like, we've seen this cycle again and again and again. So I think a lot of investors thought that's what it was. But one of the big differences between the internet and, say, biotech, where everything is incredibly speculative for the first 5 to 10 years of drug testing, everybody who invests in biotech gets it. it's always a hugely binary potential outcome. Could be worth billions or zero, and you're going to better expect both because you don't know. In the general markets, much less the case. And what the internet started to do was started to affect almost every industry there was. So most investors, no matter what they covered, had to engage and develop theories about it. And retail is a very good example. Again, I spent a lot of time talking to retail analysts whose instinct was Amazon is ridiculous. Like, we've had catalog companies before, they're not worth much. Why is Amazon worth much? And so forth. So very spirited debate. But as the decade went on, and year after year after year, you had these prognostications of doom that were proved completely wrong. And investor group after investor group was left behind. If they didn't own AOL or Yahoo or Cisco, they would underperform the indexes. Gradually, more and more people got on board. And ultimately, it's when most people are on board that's when actually the early folks should start to have the alarm bells going off, because consensus is always a scary thing in one way or the other. And ultimately, by the late 90s and early 2000 in particular, we'd achieved a consensus that the internet was going to really create a lot of business value. And ultimately, that was a pretty good time to actually say, yeah, and we're going to take a break as a result of it.